Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, we're going to talk about the topic, will gold and silver outperform equity? So we're going to take a look at some of the data points that are suggesting that the gold and silver may continue to outperform equity for at least next 2-3 years. They have done that in the past and uh, it can repeat in the future also. So I have collected some interesting data points that are suggesting that the gold and silver will not exactly will but may outperform the equity. These are all technical data points, not the fundamental or the macros. It's all related to the chart. So if you want to read about the macro, then you can Google about it, what could be the macro reasons, but this is purely the technical analysis. So before starting the video, standard disclaimer, I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's get started with the video. If we take a look at the year-to-date returns, the gold has outperformed both the S&P 500, that is America's index, and the Nifty 500. So as you can see in this chart, it is from the year-to-date, that is from the 1st January 2022 to 18th April 2022. So this is a roughly 4-month period time. So in this time period, the gold is up around 10.5% as compared to S&P 500 is down 8.7% during the same period. So currently the gold is clearly outperforming the equity, that is the stock market. Even if you look at the silver also has given around 11.56% return since year to date, that is January 1st to the 18th April during the same period of time. I have taken S&P 500 here. The similar is the case with the Nifty 500 also. So currently both gold and silver are outperforming the stock market. So why do I think they can do so? But before that, if you take a look at the last 100 years of data, equity has outperformed gold and silver massively. So this is not for like a long-term phenomena, as if we take a look at the last 100 year of data, as you can see here, the S&P 500 has given around 54,000% returns as compared to gold, which has given only 9,000% returns, and silver only 3,000% returns. So the stock market obviously has outperformed the gold and silver both massively in the long term, but there has been some instances where the gold and the silver has outperformed the stock market for few years, and we're going to take a look at a few of those instances and what data points are suggesting that it may happen again for next few years. So if we look at this time period, that is from the 2000. If we start from January 1st 2000 till this 18th April, as you can see here, I have compared it with the S&P 500. This is the chart of the gold versus S&P 500, as you can see here. So since 2000, the gold has been continuously outperforming the stock market. As you can see here, the gold has given around 500% returns as compared to 200% for the S&P 500. Sorry for that. And if we take a look at the silver has also outperformed the equity during the same period. As you can see here, if we start from Jan 1st 2000 till the 18th April, the silver has given around 300% returns as compared to S&P 500 around 200% returns. Even in the past, if we take a look at from around 1970s to this, this is the starting point from May 1972 to around 1st November 1996, the gold has outperformed the stock market massively. And for stock market, I am taking the example of S&P 500 here. So during this time period, if we ignore this area, take a look at this area, how massively gold has outperformed the stock market. Look at the rise. It almost gave during that period around 2000% returns, as compared to the stock market around 200% returns. So this is a really interesting data point that I will share in detail in a bit. So take a look at this. This is the ratio chart of gold and S&P 500. So what is ratio chart? Let me explain it. What is a ratio chart? So ratio analysis is known as relative strength analysis. Involves a comparison of two instruments to identify their relative performance. It is calculated by dividing the price of one instrument with that of the another. So what it is trying to say that basically, if you want to compare the two assets, or maybe two stocks or anything like that, and want to see which one is the that which one is has outperformed the other, so you just have to divide one with the another. So in this case, I want to see how gold has performed relative to S&P 500. So I have divided the gold with S&P 500, and as you can see here, the gold was in a decline since 1940 to around 1970 or 68, and then it broke this declining trend line. Look at this line, and it went up, and this is the same period. You can see in this chart, this is the same period around 1970 to this peak. In that chart, I have taken the data till this peak. So this whole rise was from around 1970 to 1980, and look how massively the gold has outperformed. Both the stock market and gold were at this point during the start, that is around 1970, and look where the gold went and where the stock market was, that is S&P 500 during the same time period. This is another time period, that is this is the chart of the silver also gave similar outperformance during the same period of time, as you can see here, from 1971 to 1980. Look how massively the silver rose as compared to the stock market. This is the ratio chart of the silver and S&P 500. If we start from around 1973 to Jan 1980, look how massively it outperformed the stock market. So let's take a look at it in a bit detail. I'm gonna go here at the chart. So this is the chart of the gold. I'm gonna go to monthly time frame, and as you can see here, look how the gold has performed. So we're gonna use the line chart in this case, and let's compare it with the S&P 500. So let's compare it with S&P 500. So as you can see here, if we take a look at the longer term trend, as you can see here, the stock market has clearly outperformed the gold, but during the certain time periods, as you can see here in this case, the gold has outperformed the stock market as it is doing now. If we take a look at from the year to date that I showed you previously, the gold is outperforming the stock market. So if we take a look at the ratio chart of gold and S&P 500, so here is the ratio chart of gold and S&P 500. If we go down to monthly and little bit back, so this is what the data is suggesting. Wait a second. Yes, this is what the data is suggesting. If we take a look at last 100 years of data, so during this time period, around from 1940 to around 1970, the gold was in a downtrend, means it was kind of underperforming the stock market, and stock market was doing relatively better. Let me show you the chart of the gold during the same time period. So this was around from, yeah, as you can see here, the chart is almost flat during this whole period, and look what happened during 1970s. Take a look at this here. This was in a downtrend, and once it broke this trend line, as you can see here, once it broke this trend line, look at the chart, what happened. During the same period, if we look at from 1970s, look how gold performed during that period. It went from around $44 to around $640, and after that it again started declining and the stock market started outperforming the gold. And as you can see here, it was continuously declining from Jan 1980 to around 2000. And if we take a look at the gold was flat during the same period. As you can see here, this was the peak in 1980s, and this is around 2000. This bottom has formed around 2000, and look what happened after 2000. And here if we take a look at the ratio chart, around 2000 in February, Jan Feb 2001 2, in these 1-2 years, once it broke this, look at this trend line, once it broke this trend line, look at the ratio chart, that is from around 2002 to around 2011. And let's take a look at the gold. Look what happened from 1980 to around 2000. The gold declined from $640 to around $250. And once it breaks this ratio line, as you can see here, look what happened in case of gold. It made a bottom, and since then it has been rising, and it went as high as around $2000 during that period. And once it reached 2011, it again started declining, as you can see here. And if you take a look at the ratio chart, as you can see here, it also started declining. And now currently we are at here. We are still away from the trend line breakout, but as you can see here, gold has already started performing. This year it is outperforming the market, but it kind of made a bottom in around 2015, and since then it has been rising. So what the historical data is suggesting, that if we break this line, that is around this level 0.50 in this ratio chart, which is the ratio of gold and S&P 500, we can outperform the market again, as happened during this period of 1970 to 1980 and from 2000 to 2011. This could happen again once the gold breaks this line. It's still far away from here, and it can even test it and go back down, but as of now gold is relatively performing the stock outperforming the stock market. So I think it is time to invest a little bit in gold. This is not a direct investment advice. This is just what I am doing. I just bought gold ETF. It is around 20% of my portfolio right now, and I think the gold can outperform, and I am trading with a stop loss. So my stop loss here is around this level, this dip that we have here, and we are still away from this ratio chart breakout. But once it breaks out, I think the gold will outperform the equity markets for next 2-3 years. And similar is the case with silver. If we take a look at the chart of the silver also following the gold, and as you can see here, this also from around 1970 to 1980, the silver also massively outperformed the stock market, and from around 2000 bottom formation 2000 to 2011, you can see here silver also outperformed the market. Still it's very lower from its previous peak, but it is also showing some signs of outperformance, and once the gold breaks out, the silver will most probably follow. Right now if we take a look at the charts, it is kind of forming a descending triangle pattern, which is although a bearish pattern, but can break on the upper side also. So unless it doesn't crosses this level, I will not take a position in silver. I've already taken a position in gold, because gold is already outperforming the market, although silver is also, but the structure of gold is really better as compared to the silver. So this is the main data point that I have, which is suggesting that gold may again begin its outperformance as compared to the stock market. So for hedging purpose, at least, I think there should be gold in everyone's portfolio, at least a bit of it. So that was it for today. If you learned something, please consider hitting the like button. and don't forget to subscribe and share it with your friends, and do consider about gold. And this is not a, again, this is not a investment advice. I'm not a registered investment advisor, so please take risk according to your risk appetite. So that was it for today's video. I hope you enjoyed it, and please consider hitting the like button, and don't forget to subscribe and share. Goodbye, take care.